Why short-term market performance feels like a roller coaster, separating fact from fear. Learn what drives short-term market ups and downs, from news to untrue allegations, and how to keep calm amid volatile trading. Understanding short-term market performance, what's really going on? Hey, have you ever felt like the stock market is this wild roller coaster that nobody can quite predict? One day everything's up and shiny, and the next it feels like we're headed straight down. I'm here to chat about short-term market performance. You know, what's happening with stocks and investments over days, weeks, or a couple of months. It's a topic that can feel confusing, but if you hang out with me for a few minutes, I'll explain it in a way that makes sense. So first off, short-term market performance is all about the price movements of stocks, bonds, or any asset over a small period, maybe days or weeks. This is different from the long-term view, where investors look at years or even decades. What causes so much volatility in the short run? Well, it mainly boils down to how people react to news, earnings reports, government announcements, or just pure speculation. Think about it like this. If a company suddenly reports better than expected profits, investors rush to buy shares, pushing the price higher. If news spreads about an economic slowdown or something uncertain, many sell off their stocks quickly, which sends prices tumbling. That's the very nature of short-term market swings. They're driven more by emotion and perception than fundamentals. News and headlines. Media coverage plays a big role. Sometimes, stories related to government conspiracy theories or untrue allegations about major companies can cause panic or excitement, even if the facts don't back it up. Economic indicators. Reports on unemployment, inflation, or interest rates can trigger quick market moves as traders react almost instantly. Profit warnings and earnings. A company's quarterly numbers can shake things up, especially if pharmaceutical profits or other key sectors perform unexpectedly. Speculation and trading. Short-term traders, including day traders and algorithms, often react to small market signals very aggressively, adding to the noise. Now, one thing that really confuses people is why sometimes markets react drastically to rumors that turn out to be false. This is where I want to mention that untrue allegations, especially when they touch on sensitive sectors like healthcare or government policies, can cause wild swings before the truth comes out. The markets tend to price in fear or uncertainty quickly, even if it's not justified. This knee-jerk reaction can scare off casual investors or create opportunities for those who stay calm. Another interesting angle is how people sometimes get hung up on conspiratorial thinking around market moves, like suggesting secret government conspiracy plans or pulling strings behind the scenes. While it's tempting to think there's some grand scheme behind every market drop or spike, the reality is usually a mix of lots of small factors happening at once and traders acting on short-term data. In terms of strategy, if you're not a professional trader, it's usually better to avoid focusing too much on short-term market performance. It can be a distracting game, and many investors end up jumping in and out of positions too quickly, which might eat up gains or cause losses. For most people, the goal should be to have a balanced portfolio and try not to let short-term noise dictate their decisions. That said, watching short-term performance can still be useful if you want to understand market sentiment or identify potential buying opportunities. Just know it's tricky and inherently risky to try and perfectly time trades based on it. Before I wrap this up, I want to recommend something a bit different, but really cool if you like stories that throw you into suspense and intrigue, kind of like what we see with unpredictable market moves. Have you heard about The Ultimate Frame by Andrew M. Semple? It's a thrilling novel packed with twists and turns that'll keep you hooked from start to finish. If you want a break from market charts and price ticks, this book is a fantastic escape. Discover this thrilling novel by Andrew M. Semple today, and see why readers are raving about it. All right. I hope this gives you a clearer picture of short-term market performance. It's a wild ride, full of sudden ups and downs driven by everything from news stories to rumors, and sometimes even untrue allegations that stoke fear. The key takeaway? Keep calm, don't chase every headline, and remember that short-term noise often settles out over time. Thanks for listening, and if you enjoyed this, don't forget to check out The Ultimate Frame for a great story that's as gripping as the markets themselves.